Right, process costing is not as popular as the last two topics that we did, which is direct and indirect costing as well as CPV analysis. Right, but it's part of the syllabus. Just in case they bring it, we should cover it. But it's not one of these, topics that 100% will be there. Right, it's a fairly easy topic to do, not very difficult, but you need to do a bit of practice on it to master it. Right, so when you look at process costing, we are saying this is used, right, where there is mass production, right, where there is mass production, right, of the same product. Right, so here, right, production, right, is done via production is done via conveyor belts, right, and production is continuous. So what it means, right, it does not stop. Right, e.g., right, beverage companies, right, a good example is beverage companies like Coca-Cola, right, beer companies, right, energy drink companies, etc., like your Red Bull, right. So obviously they produce the same product in the same facility. Production usually doesn't stop, it's continuous production. As long as there is demand, production can be continuous throughout the year. So we don't stop production. So this is a setup that is suitable for a process costing system. Right, so process costing system, right, process costing is used to determine, right, cost per unit. Right, so we know that when it comes to cost per unit, how do you calculate cost per unit, good people, in general? Right, if you want to calculate cost per unit in general, how do you calculate that? Right, remember when you inventory or cost per unit, it's your total manufacturing cost for a particular period. We don't include non-manufacturing costs there. So your total manufacturing cost for a period, which you then divide by the number of units produced, which is your output. Right, then you can get your cost per what? Per unit. Now, for you to be able to calculate this, right, you need to get to a point in a year when you can determine the total number of units produced, and then you can add the invoices for costing kit and get the total what manufacturing cost. So this normally works with a company that has got a cutoff period. Right, this works with a company that has got a cutoff period, what we normally call your year end. Right, where year end basically ends with the cutoff period. For example, you'll find that most companies that you work for, right, towards December, maybe on the 22nd or on the 23rd, production is closed off and the company closes, and you get a break maybe from 2023 December, and you only come back maybe on the 2nd of the next year. Right, so when that happens, it simply means that you are then able to add the number, or sorry, the invoices that you incurred for expenses during the year, and therefore you can determine the total manufacturing cost. Then you can go to production. So when you know that you are going to cut off maybe on the 23rd, what companies will normally do, maybe at around, say, 10 in the morning, they stop putting in the raw material into the conveyor belt, into the system, right? So that they can mop up on production for that particular year. They finish whatever is sitting on the factory floor. They finish up the work in progress and convert it into finished goods. So that by the time now that you say cut off, you no longer have units that are being produced on the production floor. Everything that you had on the production floor, because you stopped putting raw material, it was converted into finished goods. So therefore, you are now able to determine the total number of units produced in the year, and you can compute that calculation. Now, when you look at a situation where process costing is required, right, the end of the year or year end is theoretical. There is no cutoff. If you go to Submiller on 25 December, they will be working there. Production will be steaming head on. It's continuous production. Production does not stop. Unless maybe if there is no demand. As long as there is demand, they keep on producing. So therefore, cutoff is theoretical. It is never what? Practical. It means that there is no stopping of production, which means when you say maybe your year end is on 31 December of a particular year, right, you will still have work in progress that is being produced in the factory, right? And at the same time, you also have finished goods. Now, the work in progress and the finished goods, they both contribute to your total manufacturing cost for the year. So, however, these two, especially the work in progress, remember, is as unfinished goods. You can't add these to then get the what? The total number of units produced. Because this is work in progress, incomplete goods, this is a complete good. So we have a challenge with this type of calculation there. So,
Yebo.
yes, ma'am. Right, please mute if you're speaking on the side. So what is the solution? Right, what we do is we then take the work in progress, we convert it into equivalent. Right, finished goods. Right, for example, if I've got 10 units of work in progress, which are 50% complete, right, I will then assume I've got 5 complete units. Right, because I'll be saying theoretically 10 units that are 50% complete would have consumed the expenses required for 5 complete units. So when I have that, I now say if my finished goods, which I have, plus the 5 converted units, I then have my total. This is what I then divide into my total manufacturing cost. So in essence, that is what we are trying to do with process costing. Any question on that, good people? Are we on the same page?
Can you please repeat again?
Yes. So remember, Aniti, we are saying to calculate the cost per unit, you need the total manufacturing cost for a particular period divided by the total output. Right? It is possible for a system where you have a practical cutoff, where you mop up on the workflow. All the units that are incomplete, you finish them. Right? But with process costing, when you say this is my cutoff, production is ongoing, which means you still have WIP, which is basically units that are being produced in the factory. So these, together with the finished goods that you have, they would have contributed to your total manufacturing costs. Right? But you can't add these two. You can't add these two to get the total output because they are not the same. You only add like and like. So a half complete unit and a complete unit are not the same. So what is the solution? You need to take this WIP and convert them into finished goods. So if I've got 20 items of WIP, which are 50% complete, it's as good as I'm having 10 complete units. So if I've got finished goods here, which are 20, and I've converted my WIP 20 units, which I've converted to 10 units of what? Of finished goods, then I can add these to get my 30 units, which is my total output. Right, so once I have that total output, I can divide it into my total number of units, sorry, my total number or my total manufacturing cost, and I will have a good estimate of the cost per unit. Are we clear?
Yes. Okay, thank you.
Right, so in essence, that is what this process costing is all about. Right, but this is a simplified representation of what we are trying to do. Right, the best example is to go through a question. So let's go through a question and then we'll explain as we go along what we are supposed to do. Right, so there is a question that I also sent, which is written process costing in the group there. Right, that's what we are going to be using. Right. Right. All right. I will change that. This terminology is very, very unfamiliar to me. This is a quantity statement. Right. So you know that usually in management accounting, if you go to one book, they use a different term. If you go to another, certain things are named differently. Right. So here they wanted a quantity statement. This is the weight that you are going to encounter in your own questions at UNIS. Right, so we want to do a quantity statement there. All right, so this is the question that we have, and here is what it says. Right, it says Emerald Enterprises manufactures a product in a single process and uses a process costing system. Right, then it says material is added at the beginning of the process, and the labor and the overheads are incurred uniformly throughout the process. Losses occur when the process is 40% complete and is estimated that normal losses will be 10% of the units that reach the loss point. The weighted average method is used in the valuation of stock. The following information is available. So I'll be explaining some of the terms used there as we go along. Right, we then have units, we then have the rand value. So we have got work in progress on 1 January. Right, remember this is the information for January. So 1 January is the beginning of the year. So this is opening figures. So in terms of material, labor, and overtime, we're given the values, but there were 8,000 units on hand. Right, then these are the opening work in progress are 25% complete. So these units that we have are incomplete. They are 25% complete. Then we have the input during January, right? We have got 87,000 units. This is the rand costs that were given. And then we have the work in progress, right? We have the work in progress on 31 January of the year 20X6, which is the end of the month, closing inventory, 7.5 units, which are 60% complete. Completed and transferred to finished goods is 75,500 units. So the first thing that you normally do with process costing, right, it is to calculate or to construct the quantity statement. So we are going to look at the quantity statement, right? I will explain also as we go along the use of the quantity statement. So you take your page, right? You divide it into two. Right, so we have our two pages, our page divided into two columns, right? And then you create rows, two of them. Right, this here represents actual quantities. This represents equivalent units. So normally it's not quantities, it's they just say units. So actual units and then equivalent units. Right, this you divide into two again. Right, like this. Right, this one you divide into three columns. Right, the middle column must be slightly bigger than the other columns there. So I'll just put it on the side like so. Right, so here you say material, right? Then you put percentage, and here you say conversion costs. Right, what is a conversion cost, good people? Right, what is conversion costs? Right, remember classification of cost by nature. When we say conversion cost, this is the cost of converting the raw material into finished goods. And then we have material. So remember, we're in production, you have the material and you must convert it into finished goods. Right, then this side, you then have input. Right, you have detail. Right, and then you have output. Right, so you always start with your input. And when you do this, you need to check whether you're using the weighted average cost method or you are using the FIFO method. Right, remember we are in production. Right, we are then saying in the month of January 20x6. Right, how many units did we start with? These are opening units which were being produced in the previous period but were not complete in the previous period. So when we are doing the quantity statement, we are doing that for the factory. We are in the factory, we are saying, let's look at the quantities that we're dealing with. So normally in the month of January, when you start, because it's continuous production, at the end of the previous month, there were units that were in production which were not yet complete. So those are your static units. So you say opening units. So you start with that, or opening WIP. Right. So you start with the opening WIP, which were the units that were still in production in the previous period. So when you go to the question, in terms of the opening units, there were 8,000 units. Right, these go to your input. Then what also goes into your input, what also goes into your input, right, will be the units that you introduced in the current period. So when we say units introduced in the current period, we're saying the material that you put in the current period was for how many units. So therefore you say put into production. How many new units did we commence with production? So these will be given, right? When we look through, it says here, input during January. So we introduced material for the production of 87,000 units. So you bring in the 87,000 units. So opening WIP as well as the raw material that you introduced will then give you your input into the process at the beginning of the year. So the right, sorry about that. Right, so what you then have is your input, and then from this input, you are going to have your output. But all input for this type of calculation is assumed to have been put at the beginning of the year. What does that tell you? all the units that are in the factory being produced, they are already 100% in terms of material. No material is going to be added along the process. Right, from there, we then have output. Any questions on what we have, good people? Are we clear so far? Right, are we there?
Yes.
Right. Then from there, we then say how many units were finished, right, and transferred. Remember, we're talking about the factory here, right? When you finish producing a particular unit, right, whatever you finish, you then transfer to the finished goods store. You remove from the production floor. Right, so we need to check how many units were finished and transferred. They will always give you that. Completed and transferred units 75,500. Right, then we are saying what happened to the remainder of the input. Because our input here is 8 plus 87, which means 95,000 units. But we were only able to complete and transfer 75,500. Right, in production, it doesn't mean that everything always works smoothly. There is always what we call losses, and we recognize normal loss. Right, we also recognize abnormal loss. Right, so when we say normal losses, these are losses that are expected in production. These are losses that management budgets for. These are losses that management cannot improve by being more efficient. Right. For example, if I am perhaps making fabrics, making clothes, right, I buy material in rolls, but I need to cut patterns, which means I will have offcuts of material. So when I put a quantity of material in my production, I will have some losses to do with the fact that I need to cut patterns and I will have cutoffs. So it doesn't matter how efficient you are in production. If you are making clothes, you will have cutoffs. So when we say normal loss, it means through experience, using our best machinery and our best personnel, we have determined that offcuts should be such and such a percentage. So if we are saying offcuts should be 5% of the total raw material input, now that is our normal loss. But it doesn't mean that we always have efficient production so that we have a normal loss of 5%. If because of one reason or another, maybe the machines were not working properly, maybe we just got in new employees, then we lose more than the 5%. The extra expenditure or the extra losses are what we call abnormal loss. So abnormal loss is any loss that exceeds the normal loss of the entity. Right, so either the opening WIP is now in finished goods, or some of it went into normal loss. If we incurred more than the normal loss, some of it spilled into abnormal loss, or some of it is sitting in closing WIP. Right, remember there is continuous production. By the end of the year, there may be units that we have not yet completed in terms of production, and they are still sitting on the production floor. That is closing WIP. So the output explains where the input went. Right, then we close here the calculation. Right, so remember, the output is a calculation or is a capture of where what you call it, the opening WIP is. Right, so you add here, you are going to have 95. So what I'm presenting to you is a calculation based on what? Weighted average cost of capital. So this is 95,000, right? This is 95,000. Always this will be 95,000 here if you are using the WIP. Nothing will change. Right, output must balance. So therefore, your input and your output should be the same because you are saying, where is the 95,000? Some of it was finished and completed. Some of it was abnormal loss. Some of it was normal loss. And a bit of it is still remaining in what? In closing WIP. So there must be always a balance. If you see a different figure there, something is wrong. Right. Then we go to the work in progress on 31 January, end of the year, 7.5 units. So that is given. We have 7.5 units in closing WIP. Right. Then from there, now we look at a normal loss. This is what the question then says concerning normal loss. Right. So they say, uh, right, losses occur when the process is 40% complete. And it is estimated that normal loss will be 10% of units that reach the loss point. So let's give a few notes here, right, on losses. Right, these are material, all right, losses in the production process. Right, these are losses, material losses in the production process. We have the normal, right, losses. Right, so I'm giving you these notes because sometimes you may need to explain these terms. Right, theoretical. Right, so when you talk about normal loss, this is expected in the production planning. Right, then the normal loss we are saying cannot be eliminated. Right, cannot be eliminated. Right, by improving production. Right, we are simply saying it is inevitable that you will incur this. Right, so these cannot be eliminated by improving production. Right, so these you have to plan for. So these are manufacturing costs. So when you cost a product, you also include the manufacturing costs. Right, then these are usually expressed as a percentage. Right, these are usually expressed as expected percentage based on experience. So through experience, the company will have an expectation of the type of loss that they are supposed to incur. Right, then we have abnormal loss. Right, then we have abnormal losses. So this represents any loss above expected or normal loss. Right, these are evidence of production inefficiency. Right, these can be eliminated by improving efficiency. So if you are using old machines, which are now not working properly and are causing you to lose your raw material, you can buy new machinery. You can maintain them better, and it will eliminate or improve the normal losses. These are not, these are periodic costs. Let me explain it that way. These are periodic costs, that is non-manufacturing costs. These will be written off after you have calculated your gross profit. these will be treated like any other non-manufacturing cost. So they won't be included in the calculation of cost of sales or cost profit. Those are abnormal losses. Right. So in terms of the losses, right, losses occur at a particular point in our production process. Right. Think about normal losses, for example, as putting a quality check along the production process. So obviously you can't check units for quality at every stage of production. Maybe you check halfway through production. So if you are checking halfway through production, it means your quality check is at 50% stage. That's when you check the units that are being manufactured, and the ones that have got defaults you put on the side, which means they represent what? A loss. Sometimes it can be at the beginning of the year, sometimes it can be at the end of the year, but the question will tell you at what particular point you are going to have your quality check. So now we are saying losses occur for every unit that reaches the wastage point in the current year. So the key is to determine the wastage point and to determine and to look at the units produced to see whether they did reach the wastage point in the current year or not. So that is the trick that you have to look out for. What is the wastage point? The units that you had in your input at the beginning of the year, did they all reach the wastage point or not? And this is how you interpret that when you go through a question. So here they told you the wastage point is 40%. Losses occur when the process is 40%, and it is estimated that normal losses will be 10% of units that reach the wastage point. Right, so what you do with opening inventory, you go and check and say, what is the level of completion of opening inventory? They were very clear, 25% complete. Then you compare it with the wastage point, which is 40%. So now we are saying the opening inventory, when it was bought in from the previous period, remember it is opening inventory because it was there in December. When it was brought in January, right, the question that we are saying is the opening inventory, had it been accounted, had normal loss or losses been accounted for in the previous year or not? That is the question that we want to answer. So in the previous year, these units were not checked for any deformities. The quality check did not touch these ones. Right. The reason for that being the fact that these units were only 20% complete, and we only check units when they reach what? 40% complete. What does it tell you? These units will be checked in the current year. Are we clear about that, good people? Right. Are we clear, good people?
Can you please repeat that?
Right. So the key thing is to check what is the wastage point, 40%. Then you go to your opening inventory, you check the percentage of completion. So when we brought these things from the previous year, they were 25% complete. Right. Then we are saying we started producing from 25% going forward. So which means that therefore these units did reach the wastage point in the current year. Now remember, you are using belt like or conveyor belt production. So when you started the current year, the opening units were already 25. Whatever you added from zero. So if there are any units that you completed, you started by completing from what? Opening whip. Are we clear? So the opening whip went from what? 25 and reached 40 and went all the way to 100%. So opening whip units do have normal loss because they reached the wastage point in the current year. Are we clear?
Okay. Yes.
Right. So in principle, as long as the opening WIP is below the wastage point, then you are going to account for losses on the opening WIP. Next, you check the closing WIP. What is the level of completion of the closing WIP? 60%. Right, this is above the 40%. Now remember the closing WIP here, these units did reach 60%. The closing WIP would have started from zero because this is a conveyor belt type of production. So when something is 25%, there's something following behind it which is below 25. So therefore, at the end of the day, what we have in closing WIP should have been units introduced in the current year. Are we clear? Right, why am I saying that? We completed 87 units with 80,000 of those coming from what? Opening WIP.
Opening WIP.
Right, so the remainder now out of that 87 is what makes up the 7.5. It started from zero because we introduced in the current year and it reached what? 40%, all the way to what? 60%. But these units had already reached the wastage point in the current year. Any unit that reaches wastage in the current year must have normal loss. For closing WIP, as long as it is equal to or above the wastage point, it does have normal loss. So when the opening WIP and the closing WIP have normal loss, we conclude by saying all the input units that we have, which is 95,000 units, right, did have normal loss. And the normal loss is charged at what? 10%,
10%.
9.5. So therefore we have 9.5. Then the abnormal loss is just but the balancing figure. So we say 95,000 minus 7500, right, minus 9500 minus 75,500. Then we are going to have 2.5. So that represents the abnormal loss, right? That is just a balancing figure. Any questions on the calculations so far, good people? Are we clear?
Hmm.
Right, you have to understand that. Process costing, if you can't do the quantity statement, you are in trouble because everything depends on the quantity statement. Right, it's a very simple thing. 95 here and 95 there, always doesn't change. Whether it's the FIFO method or the weighted average method. This will be given. This will be given in the question. You have to look out for these two. For the normal loss, you check the level of completion or the wastage point. Right? So let's see on calculating normal loss. Right, if opening units, right, are above the wastage point, then there is no normal loss on the opening inventory. Now, if the opening units are below the wastage point, right, then we calculate normal loss. That's for opening inventory. For the closing WIP, for closing units, if it is equal to or above the wastage point, right, we calculate normal loss. Right, if it is less than the wastage point, there is no normal loss. So that is what you need to what to remember. Right, so that when we then go to our example here, we are very clear. The opening whip is below the wastage point, it has got normal loss. The closing whip is above the wastage point, it has got normal loss. So therefore, we are saying all the units that we have did incur normal loss. And they told you normal loss is 10% of all units that reach the wastage point. So then you have now your what? Your 9.5. This one is just a balancing figure. Now you say that plus that from 95, it will give you 2.5. And you'll be where we are. Now, all material that you have is included at the beginning of the process. All material that you have is included at the beginning of the process. So what it tells you is that all units that you have, right, all units that you have in terms of your production are complete in terms of material. So when we say something is incomplete, it's work in progress, we are talking about the conversion cost because all the material are fed at the beginning of the period. So therefore, we are saying an output of 7,500 in completed and transferred will translate to the same quantity in terms of material. So it is the same for everything here if you are using the weighted average method. Right, then when we're saying something is incomplete, it is incomplete in terms of conversion cost, but the completed and transferred units are already complete. These were complete units, so therefore you say, I was supposed to say 100 there, not put percentages. Right, I was supposed to say 100% like this. Right, so we have 100% complete in terms of finished goods. Then the normal loss. Right, remember, normal loss occurs at 40%. So these units, we manufactured them only up to 40%, and then we condemned them. So we stopped the production process for the condemned goods at 40%. So therefore, we assume they would have consumed the conversion cost equivalent to 40%. So they will convert to 3.8 units. 2.5, same story. It was condemned also at the 40% stage, which gives us 1,000 units. But the finished goods, we manufactured them up to 60%. So they consumed, or they give us the cost of 60% complete good. So which means they will translate to about 4.5 units in total. Then we add 7,500 plus 3,800 plus 1,000 plus 4,500. Then we are going to get 8,4,800. So this is your quantity statement, good people. Any question?
Can I ask something? I just need to understand something.
Yes, please.
So, as we're
Please ask.
saying that the closing web, ne?
Yes,
So the closing web it's complete at 60%, which is 4.5.
yes.
So the remaining ones are when we go to the following year, are we going to say
Yeah,
they incurred loss?
yes, the remaining ones now, remember they've already incurred the loss here, right? So it means when we start next year with 7.5 units as opening inventory, we are not going to calculate normal loss on these units because they would have already what? Been accounted for normal loss in the current year. Right, are we
Okay.
clear?
Okay.
But the 8,000 units were at what stage
Open.
here? 60% is
Open.
the high, we're at 25, you see. So in the previous year, they had not yet reached the wastage point. That is why we are including them in the calculation of normal loss because it was reached in the current year.
Okay. Can we go back again on the 25? Please explain it.
Right. On the 25, remember the 25 had not reached the wastage point of last year. Ne?
Yes,
These units
yes.
5% complete. So they did not have normal loss in the prior year. They actually
Mm.
reached normal loss stage in the current year.
In the,
That's why we are in the calculation. Let's assume that this was 75% complete. Ne?
okay.
What it meant is that we don't have normal loss on the opening whip. So we're going to pay 95,000 minus 8,000 because we don't have normal loss there, multiplied by the 10%. You understand?
Okay. 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 I
Sure.
get it. Thank you.
Wonderful. And then now we go to what is called a production cost statement. Now, the quantity statement was meant to convert the work in progress into finished goods and to add it together with the other what? Finished goods, so that we can have a total of what we have completed in the current year, including the converted what? Work in progress. So now we need a calculation to determine the cost per unit. So we need three columns here. Right, we need three columns because the calculation is done in this way. Right, we'll have a total. Right, so we need a total. Right, we need material. Right, then we need conversion costs. Right, then we need conversion costs. Right, so total material and conversion cost. And then we say current, or we say opening WIP. And then we say current production. Right, then we say total. Right, by the way, this is for weighted average cost of capital. There will be a different calculation, right, based on the FIFO method. It will be slightly different. Right, so we calculate in this way. Remember, calculating cost per unit is total cost divided by the number of units, total manufacturing costs. So this is what we are now doing, but we do it separate for material and conversion cost. Right, if you go to the question, on the opening WIP, they will give you the related costs. So we see WIP 1 January, material was 66,120. So this was the cost of the material that was in opening WIP. Conversion cost, remember, is direct labor plus overheads. So we add these two. 10,600 plus 6,800, we are going to get 17,400. Right, so that's conversion cost. Conversion cost is direct labor plus overheads. So therefore, we are saying in our opening WIP, we had already incurred a cost of 17,400. Then we add these two together, and we are going to get 83,520. Thank you. Right, then we go to put into production. We then introduced the new units. On those new units, the cost of material was 553,755. Right, then the cost of conversion costs. So you now have 443,000 plus 248,350, which means we are sitting on 691,350. So this is what you bring here under the conversion cost. Right, then we add the two, we get a total. Right, which will be 1,245,000. Right, 105 plus the 83,520 in material total. Then we have a total here of 1,328,625. Simple put, our current production cost in total, including the cost of opening WIP, is that figure. Then we add 66,120 plus 553,755. We get a total here, which is 619, right, 875. Right, 17,400 plus 691,350. Then we get 708. Right, 750. Now we have our total costs, but more importantly, we have subdivided into the cost of material and the cost of conversion costs. And now we simply divide by equivalent units. Right, so we divide by the equivalent, right, units. So we divide that by the equivalent units amount, right, so that we can get our cost per unit. Right, the equivalent units, you now get them from the quantity statement. That's why I'm saying if you make a mistake here, then you have challenges with the next calculation. So in terms of material, we had used material equivalent to the production of 95,000 units, but we had incurred the cost of conversion equivalent to 84800. So therefore, we divide here, right, by 95,000 and here by 84,800. Right, then we are able to now get cost per unit. Right, in terms of the conversion cost, right, which gives me 8.36. 619,875 divided by 95,000, right, which gives me 6.53. Then you add the two, it means our current production cost in total is 14.89. So that is a production cost statement. Any questions, good people, on that? Right, are we following?
So, okay, can I ask quickly? I don't know if so a production cost and manufacturing cost is it same thing? Can you say it's the same thing?
Yeah, it's the same thing.
Okay.
And remember, a manufacturing cost is also known as a production cost, as a
Okay. Okay. Okay.
So this is how we calculate if we're having a production cost system. That's how you determine your production or manufacturing cost per unit. Right, but we are not done. Right, there is certain information that will be needed by the entity that we need to combine. So we then do what is called a production cost statement. Right, so we then do what is called a production cost statement. Right, so this gives you certain figures that you need for your accounting. Right, we need to know the value of opening inventory, of opening inventory, the value of closing inventory. Right, that we need to know. We need to know the value of our total production for the year. Right, those figures will be used somewhere in our financial accounting and management accounting reports. Right, we have achieved our main goal, which is to determine cost per unit. But then again, we are now saying, what is the value of opening WIP? Right, because in accounting, at some point, we're going to need the opening WIP. Right, remember, we need to calculate cost of sales. And cost of sales will require that we are able to determine the cost of opening WIP. Right, so opening WIP now, you can say the material, you can say conversion costs. Right, so it will be made up of three things: material conversion costs, right, and normal loss. So these are the three things that will make up the opening WIP. Right, then you go to current production costs. Right. So you have material, you have conversion cost. So this is calculated like this, and you have normal loss. Right. I'm thinking of something here. I'm thinking of something. I'm thinking of something. Right. For this type of calculation, if you are using the whip, what I'm giving you is for the FIFO. I want for the weighted average cost of capital. You say completed and transferred. So you only deal with opening whip if you are using the FIFO method. Right. And then here you then bring your normal or your abnormal loss. Right. And then finally you have your closing whip, which is also material, conversion costs, and normal loss. Right. So you will have to know how to differentiate the statement based on the FIFO and based on the weighted. So what I've given you is for the weighted average method. Right. Then in terms of calculations here, right, we need to deal with the normal loss. So we are going to say calculations. Right. Then we want to calculate normal loss rand value. Right. Is equals to normal loss material plus normal loss conversion cost. Now, the normal loss in terms of material, you go to the quantity statement. Then you go to where it says normal loss and where it says material, where they meet 9.5 and conversion cost 3.5. Sorry, 3.8. So we are saying that our normal loss is equivalent to 9.5 units and here is equivalent to 3.8 units. But we want the rand value, so you need to multiply for each unit by the cost per unit for material and for conversion costs. So now you go to the cost, production cost statement, where here it was 6.53, here 8.36. So here multiplied by 6.53, here multiplied by 8.36, right, which is the cost of material per unit. Then we are able to determine that. So we say 95 multiplied by 6.83, right, then we get 62, right, 035. And then we say 3800 multiplied by 8.36, and we are going to get 31, right, 768. Then we add the two, we get the total normal loss incurred. Right, so our total normal loss for the period was 93,800. Any question? Right, are we clear? Once we have that,
Yes.
we now need to allocate the normal loss. So you go to another calculation where you say allocate normal loss. When you allocate normal loss, the material is allocated separately. Right, so you go and do a calculation like this. So you need a table. Right, a table like this. Right, so in that table, you are going to have, right, you will have the calculation, right, you will have the rand value, right, Right, you have details here. Right, you have details. Okay, that's not clear. Right, I think I put this thing. I'm not supposed to put that. Right, details. Right, then you have your opening whip. Right, you have current production. I you will have completed and transferred. Right, then you have normal loss. Then we have closing. Right, whip. Right, then we need a total column here. Right, so I think I need another column. I need another column here. Right, so it will look something like that. There we go. Right, what we then do, we then say this is quantity. We then go to the quantity statement. That's where we get quantities. Then we say in terms of material, what is the completed and transferred? 75, 500. Right, I want abnormal loss, not normal loss. And here we got, I think it was 38, 2500. Right, and we got, in terms of the closing whip, it was 7.5. Now, normal loss by nature will be shared to these three things. Right, the total value of normal loss must be split between completed and transferred, abnormal loss, as well as closing whip. So you don't put normal loss there. So 75, 500 plus 2.5 plus 7.5, all in all, we then have a quantity of 85, 500. So then we are saying, let's share the normal loss based on that total of 85, 500 multiplied by the normal loss value in terms of material, which is 62035. So therefore, 75, 500 divided by 85, 500, all of that multiplied by 62035, which is going to give us an amount of 54, right, 779. I just rounded off there. Then 2500, right, divided by 85, 500, multiplied by the same amount. Right, that will give us a value of 1815. Then the 7.5 divided by 85, 500, multiplied by the same. Right, so it simple means if I've got 62035 minus 54779 minus 1815, right, then I will have 5441. This should be equivalent to 62035. Right, I have allocated the normal loss in terms of material. I need to do the same to the normal loss according to conversion cost. So allocate, right, normal loss conversion cost. So I'll still have a similar table, but this time I'm allocating, right, the normal loss according to the conversion costs. Right, so completed and transferred, right, abnormal loss, and then the closing WIP. So now I go and check these figures, right, based on conversion costs. So I still have 75,500, but I've got 3.8 and so I've got 1,000. So 75,500, 1,000 and 4.5. Right. By the way, when you do this allocation, if you are going to allocate normal loss to the closing WIP, then it must have had normal loss. If closing WIP does not have normal loss, then you won't include it in the calculation. Now, we clear, good people. We are calculating in this way because in this question, all the units including closing WIP had normal loss. But sometimes you may find that closing WIP does not have normal loss. If that is the case, you don't allocate normal loss to the closing WIP. Right, so all of this then multiplied by the units that you have there, which is 31, or by the cost, which is 31,768 there. Right, 75,500 divided by 81,000 multiplied by 31,768, you are going to have 29, right, 611. 1,000 divided by 81,000. Right, can I double check that calculation, please? Right, correct. And then 1,000 divided by 81,000 times 31,768. And that will give me 392. Right, remember, all in all, I want a cost of 31,768. Then I'll just calculate a balancing figure. So therefore, 31,768 minus 392 minus 29,611, I will be left with 1,768 or 65. All right, once you have this, then you can go and complete your cost allocation statement. Any question? Right, to complete the cost allocation statement, this is what we do. Right, so we then go now to the completed and transferred. We say in terms of material. So you go to the quantity statement. You say in terms of material completed and transferred, which is finished goods here, right? Finished and transferred 75,500. And in terms of also the conversion cost 75,500. So you then say 75,500 is the units, and it was also 75,500 here, multiplied by the cost per unit, which you get from here, which is 6.83, right, which is 8.36. And then the completed units also allocate normal loss. You allocate normal loss in terms of the material to the completed and transferred, which is 54779. That's for material. And then for conversion costs, you allocate the 29,611. Right, then you are done with the completed and transferred. So 75,500 by 6.83. So that will give us 515, right, 665. 75,500 by 8.36. That will give us 631, 180. 54779 plus 29611. So that will give you 84,390. Then you add everything together. Right, then you're going to get 1231, 275. So this here goes to your calculation of cost of sales. When you say opening finished goods from the previous year, then you say plus manufacturing cost, you add that value. Are we clear, good people? When you're now in what? Financial accounting. And you want to calculate your cost of sales. So we are simple calculating for you the value of your manufacturing cost for the year. That is the figure. Then the abnormal loss, you do the same. What was the quantity? The quantity in terms of material, 2.5. The quantity in terms of conversion, 1,000, multiplied by 6.83, multiplied by 8.36. Right, so we are taking that from the quantity statement here. Right, we have the 2, we have the 1. Right, then we bring in the material, or sorry, the normal loss, 1,815 and 392. Right, so 2.5 multiplied by 6.83, that gives you 17,075. 1,000 multiplied by 8.36, that gives you 8,360. 1,815 plus 392, that gives you, right, 2,207. Then we add everything together. Right, so plus 8,360 plus 17,075, right, which gives us 27,642. So this is the value of abnormal loss. It's made up of the material component, the conversion component, plus a allocation of normal loss. And now this is an expense. You only account for it where you have other expenses in the statement of financial position, in the statement of profit and loss, in the statement of profit and loss, sorry. Closing WIP, you need that for the calculation of your cost of sales, as well as forming part of your closing WIP when you do the statement of financial position and you need inventory. Now here, we had material 7.5 by 6.83. Here we had 3.8, which we multiply by 8.36, right? And then we go to the conversion, 5441, the normal loss conversion cost plus the normal loss of 1765 according to conversion cost 1765 there. So this is what we have, right? Let's verify the figures, right? That's in terms of abnormal loss. It's actually closing it's actually 4.5 and 7.5. So here I've got to correct. This will be 4.5. Right, 7,500 multiplied by 6.83, that will give you 51. Right, 225. 4,500 multiplied by 8.36, that will give you, right, 37,620. 5,441 plus 1,765, and that will give you 7,206. Then you add together. Right, you are going to get a total of 96,051. Then you add the totals together. Right, so that will then give you a total of 1,354,928. So this is your total production cost. Right, this figure must be equivalent or close to the one that you have here. It must be close to that figure. This figure is different, né? Because now we've got that minus 1,328,625. Right, we are different by 26,000. That's a lot. It should be equivalent to this value. Normally, it differs because of rounding off. These two figures, they differ because of rounding off. So if they are too different, something will be wrong somewhere with the calculations. Some calculation might have gone astray. So if you say 7,500 by 6.83, right, 515, that is correct. 7,500 by 8.36, that looks correct. 54779 plus 29611, That looks correct. And then we add. Right, so that looks correct. Let's look at this one. We said abnormal loss material, 500 by 40, that gives us
Ona okay. Tissue direction sana.
correct. Please mute.
Gorti puruti stambahana.
That looks correct. And then the 7.5 in closing whip, 7500 by 6.83, that looks correct. Right, the 4.5 by 8.36, that looks correct. The 5441 plus 1765. Right, then we add. That gives me 96 plus 27, 642 plus 1231, 235. Right, I'm still getting the same. Right, so usually it means that maybe our rounding off is off. Usually it shouldn't be different by 2 pick a figure. So here for about 26,000, I'm not really happy with that. It looks slightly higher than normal. Right, but that's how you calculate. We can always check around and see maybe we made an additional difference somewhere. Right, or some rounding off that gives us a big difference. Right, so that is your process costing if you are using the weighted average.
Sorry, sir.
Yes, ma'am.
I think the difference, just move your page a bit down up there on the, yeah, on that 138. I think the current production on
All
the
right.
total.
553,755 plus 691,350. That should have been 1245. It looks okay.
So where did you get the actual size? It's just that I didn't complete my notes.
You're saying which figure?
The 1245.
1245. We are supposed to add, ne? We are adding here.
Yeah, before the 55375
Yes,
between
so
the two.
two, right, I'm getting 1245 plus 83,520. Right, maybe there's a
It's the one that was in the statement. That 553 is the one that was in the statement. I think we should just show us the question so that we can see in those figures.
so that we can check these. I think there is 553 there.
Please.
Yeah, if we add 553, 7.
At 553, 755, we're happy with that. And then 443, 000 plus 248, 350. Right, that is giving me 6 that, and then plus 553, 755. That looks correct, ne? That looks correct. Maybe it's the opening, I don't know. Let's see. Opening, that's 10,600 plus 6,800 plus 66120. That gives me 83. So that is 83 plus 1245, 105. It still gives me the same. It gives me the same. Right, it could be just rounding off of these things. You see, these things we would have rounded off. Yeah. So don't worry too much about that. It's not a big issue. As long as you understand everything that you have calculated, maybe when you are working out or practicing this, you will see where the error is. You will let us know. Right, this method that we've used is what is called the long method. Right, we have applied to what is called the long method. Right, so we do have a shortcut method. So when we meet next week, we are going to start with the shortcut method. Right, you need to understand theory when it is to be applied. Right, and how it is going to be applied. And then after that, we just do based on FIFO. Okay. Right, so we do the FIFO method so that we can highlight the difference. We'll use the same question again so that you can follow nicely. So that is our week. If time goes, this is a current and cost profit volume analysis, we want a more extensive example. That's what we are doing next week. And then after that, now we jump to process costing. We do the shortcut method, and then we do the FIFO method. And we'll be done with the 2 topics. Any questions, good people? Any suggestions from the floor? Right, let's hold it here. For FAC 4862, let's meet at 2:30 in the afternoon. 2:30 afternoon for that one. Thank you very much. I shall see you when I see you.
Cool. Goodbye.
Thank you. Bye-bye.
Baba,